Welcome to the Deep Dive, the show that converts your research stack into instant knowledge.
Great to be here.
Today we're tackling a couple of big crypto challenges you've asked about. First, finding the best way to track your portfolio, across all those different exchanges and wallets.
It gets complicated fast.
It really does. And second, how to deal with the confusion when different projects use the exact same ticker symbol. It's kind of chaotic.
It is. And that's an essential mission today. I mean, look at the numbers, something like, almost 19,000 cryptos out there?
Yeah, 18,786 according to our sources. Wild.
Right, across maybe 54 major exchanges, market cap nudging $4 trillion, and it's huge.
Right.
So tracking accurately, that's absolutely core.
It's not just about seeing if you're up or down, is it?
No, not at all. It's about having the data for, making smart moves and really critically getting your taxes right. And this naming chaos just makes it harder.
Totally. So our goal today, break down the tracking methods from DIY spreadsheets all the way to automated software. And then we really need to dive deep into this cautionary tale, these three totally separate projects, all using the symbol XCL.
Yeah, that's a perfect example of the problem.
Okay, so let's kick off with the classic approach, using something familiar like Excel or Google Sheets.
Right, the spreadsheet method.
Yeah. A lot of people like this, especially if they want, total control. It might seem a bit old school, but it gives you that direct way to monitor transactions, figure out profit and loss.
And visualize everything.
Yeah.
The appeal is definitely that control. If you've got complex stuff going on, or you want to use specific tax methods like identifying which batch of coins you sold.
Specific ID.
Yeah, exactly. Doing it manually gives you that fine-grained control that software sometimes hides behind a paywall.
Okay, so what does the setup actually look like? What do you need in that sheet?
It takes discipline, but it's pretty straightforward. You need columns for the cryptocurrency name, date you bought it, price you paid, quantity.
The basics.
The basics. Then you need columns for current value, what it's worth now, and finally, the gain loss.
Okay, that makes sense for logging what happened. But crypto prices, they jump around like crazy. How do you avoid spending all your time just updating prices manually? That sounds inefficient.
Right, that's the hurdle. And this is where you go from just data entry to data integration. It's the trickiest part of DIY. Now, if you happen to use Microsoft 365, there's a bit of an easy mode. Excel has this built-in stochastic feature.
Oh, yeah.
Yeah, it can automatically pull live prices for some of the big ones. Bitcoin, Ether, Litecoin, XRP, Bitcoin Cash.
Okay, that's handy for the majors. But let's be honest, if you're really in crypto, your portfolio's probably got way more than just those 5 coins.
Exactly. That list is pretty short. So for everything else, you step up to what we call advanced mode. And this means dealing with APIs.
APIs, application programming interfaces, sounds technical.
It can be a little, but platforms like CoinMarketCap or CoinGecko, they offer these APIs. Think of it like a tap for live price data. You sign up, get an API key like a password for the data, and then you use a function in Excel, usually from web, under the data tab to pull that live feed into your sheet. Or there are add-ins like crypto sheets that can make that connection easier.
Okay, so you get the live data flowing in. Now, calculating performance. I just want to jump in here because I see this mistake sometimes. Just adding up the current value of everything isn't your profit or loss, right?
No, absolutely not. That just tells you the current total market value. To get profit and loss, the P&L, which is what really matters, you have to compare what it's worth now to your cost basis.
Your cost base is what you actually paid, right? Including fees.
Exactly right, including any transaction fees. The P&L is the difference. So you need subtraction formulas for each coin, then you can sum those up for the overall portfolio picture.
And once you have that data structured, making charts is easy.
Yeah, piece of cake. Over on the Insert tab, you turn those numbers into visuals, line charts for trends, maybe area charts to see what makes up the portfolio, even candlestick charts if you're into the trading aspect.
And the final step to keep it useful, automatic refresh. Crucial. Back in the Data tab, under Queries and Connections, you set it to update automatically. Maybe every hour, maybe every time you open the file. That way, the prices stay current and your dashboard is actually useful.
Okay, let's unpack this. The DIY spreadsheet gives you ultimate control, especially for those tricky tax things like specific ID. But wow, it sounds like a serious time commitment.
It absolutely is, especially keeping those API connections working and entering every single transaction.
Yeah, if you've got crypto scattered across 10 exchanges and 5 wallets,
right,
forget it. The time cost alone would be huge. So what's the shortcut? The automated way.
The alternative is specialized tracking software. These tools basically eliminate the data entry nightmare.
Okay.
Something like CoinLedger, for example, is a good place to start. You connect it directly to your wallets and exchange accounts using their APIs, but they manage all that complexity for you.
Ah, so they handle the plumbing.
Exactly. And what you get is a live, combined view of your gains and losses across everything, automatically updated. And a big point from the sources, the portfolio tracking part itself is often free with these. You only pay for the tax reports.
That's often the model, yeah.
Yeah.
It makes it really easy to get started just seeing where you stand.
Yeah.
Then, if you need a formatted reports for tax time, that's when you pay.
That makes sense. Now, you also mentioned some higher level stuff. Cryptio, Tactic, Gilded.
Right. Those are more for businesses or maybe crypto funds. They do much more advanced bookkeeping, tracking, crypto income, expenses, complex compliance reporting.
Wait, so Cryptio and Tactic probably not for the average person. Right, sounds expensive.
Oh, definitely. They're enterprise-level tools, way beyond personal use for most people, but they show that there's a need for automated compliant tracking at, all levels.
Right.
The main takeaway for you, the listener, is automation saves massive time, but you might give up some of that super granular manual control you get with a spreadsheet. Trade-offs.
Okay, beyond just seeing your balance, what about getting notified immediately when something happens? These real-time alerts sound powerful.
Oh, they are incredibly detailed now. You're essentially setting tripwires for market events you care about.
Like what kind of events?
The simple ones are price targets alert me if Bitcoin goes above X or below Y. But you can get much more sophisticated. Alerts for sudden volatility spikes, big changes in trading volume.
Ooh, or new exchange listings. That's a big one.
Huge one. Yeah, alerts for new listings, transaction monitoring too, and even whale tracking.
Whale tracking. Okay, how specific can you get with watching wallets? And how do they even tell you? Ping your phone.
It gets pretty specific. You can track activity for particular addresses on like all the major chains, BTC, ETH, BSC, Polygon, Optimism, Base, AVX, Tron, you name it.
Wow.
So if a known large holder, a whale moves a bunch of coins, or maybe a project you followed as an airdrop, boom, you get notified instantly.
And the notification methods seemed extensive.
Yeah.
SMS, email, app pushes, Telegram, Discord, Slack, even phone calls. Why a phone call?
Yeah, the list is long. The phone call option, that tells you how critical the alert might be for some users.
Like sell and now double.
Pretty much. If it's a massive volatility spike or a huge outflow from an exchange that might crash the price, you might want that immediate, unmissable phone call to take action fast. It cuts through the noise of other notifications.
Makes sense. And webhooks. That sounds very techy.
It is. Webhooks are basically automated messages sent from the alert system to another system. So a market event could trigger, say, an automated trading bot or log the event in another database. It's for more programmatic responses.
All right, so we've got spreadsheets for control, software for automation, alerts for immediacy, but none of it works if you're tracking the wrong thing, which brings us to the really interesting part.
Here's where it gets really interesting.
Yes, because tracking is only as good as your ability to identify the right asset. All this tech is useless if the basic label is wrong. And that leads us to the XCL identity crisis.
It's the perfect storm. Multiple projects, same 3 letters. You absolutely cannot trust the ticker alone. You have to check the contract address, the blockchain it's on.
Yeah.
Otherwise, disaster.
Big time. You could think you own part of a $16 million project when you actually own. Well, let's get into it. Let's break down these 3 different XCLs from the sources.
Okay, let's start with the first one, which seems pretty quiet.
Yeah, the one that's almost like a ghost token.
That sounds like token 1. Clico Token, XCL. This one's the native token for Clico Digital Agency. They're a brand services platform built on the BNB Chain, started back in early 2023.
Okay, and what's it used for?
Pretty simple.
Yeah.
Their clients can use XCL to buy digital services from the agency, though apparently they also take regular payments in BNB, K-Key, BSD, things like that.
All right, a utility token for a specific agency. What's the market data saying about Clico Token?
Not much activity at all. The price is tiny, like 0.000001332. But the really telling number is the 24-hour trading volume.
How bad is it?
$15.
$15 total in a day.
$15.31, yeah. Across the entire global market for it. So its market cap is basically 0. Sources call it inactive or outdated. No trades seen in the last 3 hours before the data pull.
Wow.
And we even saw a note from KuCoin Turkey saying, hey, this isn't officially listed here yet, even though the symbol might show up somewhere.
Okay, $15 volume. That paints a very clear picture. Dormant. Now, the second XCL seems philosophically opposed to trading.
That's a good way to put it. Token 2 Project Excelsior, XCL. This one's got a very different vibe, almost anti-establishment.
How so?
Their main thing is that their tokens, XCL and another called FTHT coin, are supposed to be free. They say users will never have to buy them.
Free?
Yeah. And they're very explicit. These are not currencies. They're for entertainment purposes only.
Okay, hold on. If it's free and not a currency, how on earth do you track gains and losses for that in a portfolio?
You don't. That's the point. It completely clashes with the idea of financial tracking. And they double down on this. They state, no crypto exchanges are authorized to list their tokens.
Seriously?
Yeah, they see any listing as like a violation of their rights. Technologically, it seems they evolved from an older version to some advanced blockchain for decentralized computing, and the new free tokens are only on the Binance Smart Chain. But fundamentally, they're trying to stay separate from the financial markets.
Fascinating. So an inactive utility token, a deliberately non-financial free token, which brings us to number 3, the one that actually is active and playing in the finance space.
Exactly. Token 3 is Xcellar, XCL. Now, this is a serious DeFi protocol. It lives on the Ethereum blockchain.
Okay, DeFi. What's its focus?
Privacy. Its whole purpose is untraceable, secure transactions. It uses something called the Fawkes Formula, which involves zero-knowledge proofs.
Zero-knowledge proofs. Okay, that sounds pretty technical. What does that actually let Xcellar do for someone using it?
Right, so a zero-knowledge proof lets you prove something is true, like, say, I have enough money for this transaction, without revealing any of the secret details behind that statement.
Like the exact amount or my wallet address.
Precisely. You prove the statement's validity without showing the underlying data. It's a cornerstone of strong financial privacy, which is Xcellar's whole game.
Got it. And market-wise, how does Xcellar compare to Clico Token's $15 volume?
Oh, it's night and day. Xcellar has a real price around 0.01761 when we looked, and one source showed it surging, like plus 35% in just 24 hours.
Whoa.
Yeah, real activity. Its circulating supply is huge, almost 950 million tokens, which is apparently 100% of the total supply. That gives it a market cap of nearly $17 million, $16.68 million to be exact.
$17 million versus basically zero.
And it's volatile. It hit an all-time high of over 2.5 cents just days ago, then crashed down to almost 1 cent just 2 days after that. Real market movement.
So the takeaway is crystal clear. If you just typed XCL into your tracker and accidentally picked token 1 thinking it was token 3,
you'd be tracking phantom millions based on 3 letters. Complete data garbage. You have to verify the contract address and the chain.
So what does this all mean for you, the listener? We've looked at the 2 main ways to manage your crypto portfolio. The deep control of DIY spreadsheets, great for complex taxes.
But time intensive.
Right, versus the convenience and automation of specialized software. Saves time, connects everything.
But maybe less flexibility on some specific things.
Exactly. But the biggest lesson, highlighted by this whole XCL mess, is that none of these tools matter if you don't do your homework first. You absolutely have to nail down the identity of the asset, the right contract, the right blockchain.
Yeah, whether you choose free or paid, spray feed or software, the end goal is the same: getting smarter about your finances and staying compliant. Good tracking means knowing your real cost basis, understanding the tax hit for every single trade, not just looking at the current price.
And as we wrap up this deep dive, we want to leave you with one final thought, something important that often gets lost when everyone's focused on gains.
It came up again and again in the sources. Tracking your cryptocurrency losses is just as important, maybe even more important sometimes, than tracking the gains.
Why is that?
Because reporting those realized losses can significantly reduce your tax bill. You can often use them to offset capital gains from other investments. It can mean massive tax savings.
Tax loss harvesting.
Exactly.
Yeah.
And the excitement of chasing profits, people forget that documenting losses properly is maybe the most direct financial benefit of meticulous portfolio tracking. Definitely something important for you to mull over or explore on your own.